So the consensus view for the global economy is one of a recession in Europe, UK, and maybe a mild, kind of very slow growth in the US. But what if that's wrong? And some of the evidence is showing that possibly it could be. Retail sales in the UK by all the big supermarkets in December were showing growth of anywhere between 8 to 10%. In the US, wage growth is 5 to 6%, and the economy is still growing. So what would happen if all of these forecasts were awry and actually you saw good growth in the UK and Europe? Helped also by the fact that fears of a really harsh winter have not really played out. So you're seeing gas prices fall across the whole of Europe. So these are things which are getting investors a lot more interested in what could happen if that was the scenario. And of course, if that's the scenario, then equities should move up in the very short term. It'd probably mean a weaker dollar, which we're already starting to see against the euro and the pound and the Japanese yen. Would that then, thereafter, after you see this kind of rally in the markets, would we then start thinking about stagflation? And that's something that people haven't thought about for a long, long time, since the 70s in fact. I'm not saying that that's where we're going, that's not our base scenario, but I think the next few months we'll be interested to see if this develops more into that growth could be there, inflation coming down and markets taking off. So keep an eye, because I think things are starting to look that way in the very short term.